right, so welcome to Gameland Sunday. Today is February 28, 2021, and we're entering into a new month as we bring February Black History Month into a close. And actually, in honor of Black History, I used to write articles for it, but again, not many people were actually reading the article, so I had to make a decision. Is it worth my time to put in the research to publish these articles? Maybe it is, but I test things out and I see, and the market gives me the signals to let me know to keep going. Some of those articles are actually still on the website. If you're on the website, go to the blog, or you can go to wallstreetjackboyz.com/blog, and you can check out some of these blogs that are written. But as we bring Black History Month to a close, I want you guys to check out Dr. Walter E. Williams. As a famous economist, African-American, obviously. He's trained in the Austrian ways, which you guys know I train and study Austrian economics. So a lot of the things that I talk about are some of those same principles. But Dr. Walter E. Williams, he has a website. Check his site out. Check out his videos. There are videos out on YouTube. Back in the day, he used to try to bring all the economic information to the masses by making videos of showing you how it all plays out in the real world. Those same things I actually try to do with you guys here at Wallstreet Jackboyz, just by, relating the information to real life, the impacts of these things. So Dr. Walter Williams, we just lost him last month as he passed. So I just thought it was a great time to plug Dr. Walter Williams. I was going to write an article, but I had a lot of things on my plate this month, so I didn't write one on him. But make sure y'all check out Dr. Walter Williams and add him into your African-American studies. All right, so this past week, as we jumped into, thanks, Topaz, as we jumped into this past week, it was crazy. So the markets were down. I didn't expect the markets to be down so bad. We had the NASDAQ was down almost 5%, like 4.92%. The Russell was down 2.9. The ES was down 2.45. The Dow Jones was down 1.78. What was up? Oil was up. Commodities were up. Okay. So oil was up 4.44%. And gold was actually down also. So we could talk about gold here in a second, but gold was down along with stocks at 2.81%. And Bitcoin was down 18.25%. For you guys that don't know what a bear market is, it's, 20% down. Okay. They were like almost at a bear, market turn there at negative 18%. Bitcoin is very, very volatile. If you ever traded it, I mean, this is like riding roller coasters without sleeping, because it don't sleep. I mean, you go to sleep, you wake up in the morning, ain't no telling what the hell you're going to wake up to. It can be crazy up, or it could be crazy down. So, and that's what makes it interesting when you talk about Bitcoin as being money. It is too volatile for it to be money as far as a medium of exchange. I posted on my Facebook earlier because, I've talked to my son, and, I have my son, he's here with me now, and just trying to educate my young man here. And, I like when he asks questions, because I like to tie things into video games, because he loves video games. I think he got a little YouTube channel, but he likes video gaming. So I'll try to tie things into video game. So if you guys have kids and they play video games, there's a game called Fortnite. And I'm a gamer. I've been playing games since, video games came out. Like, that's our generation, 80s babies, right? So I play all the games, and I love, military games, Call of Duty, Battlefield type games. That's my thing. But the video game industry is changing, where like Fortnite has changed the whole model. Fortnite, their video game is free, but sells, these season upgrades and stuff like that. And they make their money from these little packages that they drop every so often. And so the kids, they would ask, "Hey, Pops, can I get some money so I can get some V-Bucks?" And I'm like, "What the hell is V-Bucks, right? What the hell is V-Bucks?" Well, we to get the packages in the game, we need the digital money for Fortnite, and it's called V-Bucks. So I'm like, so let me ask you this, son. Like, are you going to get any special, things that help you to be a better gamer? Because they're not considered, right? Are they going to give you like some fire weapons that nobody else has that would give you an advantage over the rest? Because I'll give you a couple bucks for your V-Bucks thing. He was like, "Nah, you just get skins and stuff like that." And I'm like, "Oh, that's stupid. That's like a waste of money, right? It's just like a outfit or something in a video game that's not even real. It's crazy." But anyway, we're just talking about that, and so as we're talking about things like Bitcoin. I have a lot of people calling me about digital currencies, cryptocurrency stuff. We even have a group on the website because, again, if that's what people are into, then we want to have a platform for that as well. And we do. It's called the Crypto Gang right here on the website. So we drop all information dealing with the cryptos and stuff like that that's here. Well, it's interesting. My son asked me, what's the difference between V-Bucks and Bitcoin? And I'm like, that's a tough one. Okay. Maybe Bitcoin is limited. I don't know what the V-Buck situation is or whatever. I don't know if they have limit, but all I know is it's all digital. Okay. It's all digital currencies in the internet world. Right. And, also trying to get my young man situated so that he will start to invest in some gold and silver and stuff like that as well. And he knows that, right? So we have, a stash that's nearby and he can touch it and feel it. He knows it's tangible, it's real money. And so for you guys who haven't been in school or, on, what is real money, check out, what's my man, Robert Kiyosaki. Okay. So Robert Kiyosaki, he's been talking about it for a very long time. If you guys haven't followed him, he tell you what is real money. Gold is real money. And I don't even have my books nearby, but I'll give you guys a reference from Murray Rothbard has a book. I think it's called What Has the Government Done with Our Money? So you can really understand the basics of money. You need to know money. We use money for everything. Ain't nothing moving without the money. But none of us have been trained on what is money. We don't understand the difference between money and a currency. So there's different things, to go on that. And I'm not going to talk you guys' heads off about it, but if we can get into it more, we can continue the conversations on our website. Just drop a comment or, question on your own news feed. It'll show up in the news feed. On your timeline, it'll show up in the news feed, or drop, your question to the groups, and, we'll be able to see to it. So, but anyway, I thought it was an interesting question because when you actually think about it, you're exchanging, real currency, I guess, still fiat is still BS, as Peter Schiff told Elon Musk. You're exchanging it for something else to exchange for goods and services that you want, right? There's no real difference, where, gold is always gold. It's very unique, gold, the properties that it has, what it's used for, jewelry and used for certain electronics and stuff like that. It's always going to have value. It's never going to zero ever. Okay. It's been money for over 5,000 years. So, but we've seen a lot of manipulation in the markets, trying to stay away from gold, because gold puts the market in a very awkward situation where they cannot manipulate the market as much. Gold is a limiter, okay, because it's limited supply, and you can't print what you don't have on the, the classical gold standard. So of course, central banks, they get rid of it. They try to get rid of it, move around it, so they can print money to fund all these wars, to fund welfare, to do all the stuff that is making the economy, creating distortions in the economy with the illusion that is going up, creating inequalities and all this other stuff at the hands of the government. So anyway, I just want to talk about that, get that out the way right now, because again, when you see those moves in Bitcoin, I just pull up a chart for you guys real quick, just so you see what I'm talking about. Okay. So if you go on a weekly chart here on Bitcoin, no biggie, Bitcoin guys, they know Bitcoin has some wild, crazy moves. But when you see a big candlestick drop like that, all right, that huge drop, that's what we call a falling knife. Okay. You catch a knife, I'll be posting on Facebook, my catch the Michael Myers, right? Because Michael Myers, it's right. So that's that. A lot of reasons why we're seeing money going into certain things like Bitcoin. In reality, it should be going into gold and silver. Okay, gold and silver. What we see in the markets here, that's paper. Okay, real gold and silver, there's a shortage. Okay, and so you definitely want to get your hands on some of that. All right, but what the real deal is happening, what happened last week, was the interest rates. Okay, so let me just show you guys the interest rates here. This is the bond yields. Okay, and I'm going to just take away the 30 and just give us two yields to track here, just the 3-month and the 10-year. 3 months is just short term. This is what the Feds control, and this is what the Feds control. Blue one is the markets. Okay, this is the bond investors. They're like the oracles, they're up ahead of everybody else. And so based off of this, we get information. The market gets information. Now, Typically, they like to see this go up as it, indicates that, the economy is growing, but it's not as clear as that. Okay. When we see sharp turns up, the bond market is pricing in basically because they're forward thinking here, that the Feds are actually going to, they're going to lose control of inflation. Now, the Feds, if you guys know Powell, he spoke this week. I know you guys probably don't watch this stuff. I try to keep you on it. I know Jonathan, he was in there. We was talking about it. That's just going live throughout the day, telling you guys about it, my readings on it. And Powell was, for the hearing for Congress, because Congress sets the, agendas of the Fed, and, the Fed chairman, he's speaking about it, and they're asking all kind of questions. And not many of these Congress people, are trained in economics, and majority of them are socialists. Okay. And only a few of them totally actually understand economics, okay, understand how this stuff works. And this is one guy, I don't even know his name, but he was very knowledgeable. The questions that he asked, he was probably the only person that was asking questions. Now, you tell me, why in the hell would you be asking the Fed Chair Powell about climate change and the alphabet people and social stuff, right? This guy, that's not his job. Fed policy, monetary policy, it cannot give you the results that you're seeking, right? In fact, their policy is the causality of the things that people are complaining about in the first place, right? It's kind of like when we was looking at when they had Puff Daddy and Ray Dalio in a meeting, and I'm like, bro, you sitting with the biggest hedge fund manager in the world, and you're gonna ask him about stupid shit like when people, he threw his own people under the bus. He's like, man, what happens when you outgrow your staff, like your own people, right? Like he was basically saying that the people that work for him can't keep up with him, and he works too hard. They don't work hard enough for him. I'm like, bro, you wouldn't be where you are without your people. So why throw them under the bus? And besides, why would you ask this guy about that? You need to ask him about your portfolios, because that's what he does anyway. But so it's kind of the same thing. They're asking Fed Powell about the alphabet people. They're asking him about climate change. They're asking him about inequalities and stuff like that. And Powell's basically telling them, our policy just can't, it can't pinpoint a specific group. If you're saying African Americans are hurt this bad, we can't create a policy that's going to, impact them alone. Because when we do our policy, it's going to, impact the whole spectrum, and we can't control how it's going to play out. But anyway, so that meeting this week, Powell was basically just, letting the markets, trying to keep the markets calm and let the markets know, hey, if the, if inflation gets out of control, we have tools to deal with it at the time. But as of right now, it's no way that we're going to actually raise interest rates. So when they say we have tools to deal with inflation, they use political wordplay to just basically let you know, because the Fed's tool to control out of control inflation is interest rates. Okay. They create when the economy is too hot, they have to raise the interest rates. Okay. When they raise the interest rates, it's supposed to cool it off. But the markets were down last week because inflation is so hot, and the bond market is forecasting pretty much out of control inflation. And the last time, was it 2019? I think Mark and Ron should know. I think it's 2019. I don't have it pulled up. Well, 2019, when the markets had a big correction, okay? And it was basically Powell. Oh, this is what it was. Well, so when Trump and them was actually mad at the Feds, he was saying, hey, y'all need to give me cheap interest rates like y'all did Obama's, right? So because Obama, the economy grew because the interest rates were suppressed. And when Trump got in office, they started raising the interest rates, right? Because they supposed to try to normalize the interest rates to get the economy back normal. When the Feds intervene, it's supposed to be a temporary measure, and then the natural economy will get back doing what it's supposed to do. But that never actually happened, because by the time they started raising the interest rates, the markets had a fit. So last time they raised the interest rate, the market sold off. It almost crashed. It was like really bad. So Powell backed up. He said, okay, we're not going to do anything else. Okay. So they backed off. And then 2020, when the pandemic situation hit, that just gave them the incentive to go ahead and just drop those rates again, right? So we can see it right here on the chart where they just basically, drop those rates. Remember, the gray is what the Feds control. So they push those interest rates all the way down. and they're trying to, combat deflation. They do not want deflation, not at all. So they want to create inflation to combat the deflation. And so, but the problem is that they don't know how the free market participants are going to, interact with these policies. Now, it's kind of common sense that when you give people more money, what do? If I give you an extra $1,000 a day that you did not have an hour ago, that you did not work and earn, you're probably going to spend it, right? I mean, it's just common sense. So the feds are actually, trying to get the central government and everybody to come together to say, hey, we got to get people spending money to stop deflation. But what they don't know is how people are going to spend and what's going to happen with that, right? And so that's what we're all living to see. And that's the school is real life, being attentive to the markets and seeing how the markets behave, right? I got the economic theory, I got the economic training, but we're dealing with humans. Humans are irrational. We're trying to rationalize human behavior. And sometimes you just can't do that, right? But we have history as our guide to understand what normally happens, but it doesn't mean you're going to be 100% right. So anyway, so we're seeing that right now. Just like when I was telling my daughter, who's in college now, the last recession, the great financial crisis, it was bad. Okay. It was really, really bad. There was so many people out of jobs. I mean, it was people jumping off of buildings. It was crazy. And this time is a worse recession, but the outcome was not as bad because Powell and them, they came in with a whole bunch of money, unlimited printing of money and unemployment benefits like never seen before. We got 2 stimmies passed already. We got another stimmy that's getting ready to pass. The House just passed the 1.9 stimulus package, 1.9 trillion, and that's getting ready to go to the Senate. Now, Joe Biden and the Democrats, they got full control. They got the House, they got the Senate, they got the presidency. So they got the power. So it's just a matter of time when they're going to pass it. They're going to pass it. Okay. And so somebody was asking in the group about the sell-off in the markets last week. And what I tell you, I said, the markets like to be sold off like this. This is just so they can try to get the government to justify the 1.9 trillion spending package, because again, it's a big debate. And, they're already calculating that the Senate is going to, going to be into basically a tie with Republicans and Democrats. The Republicans are not going to pass it because they feel like all this extra spending is too unnecessary. But Kamala Harris, who's the vice president, she's probably going to break the tie. And, the package will get sent out. All that money has to go somewhere. OK, what they're saying is that from the last time, from last year, that money never got spent out into the economy. So still people holding on to that money. It hasn't been spent out yet. We got the $600 thing at the end of Trump's presidency, and they've seen a little bit of that money coming out. So that's inflationary. You see prices going up. OK, so prices going up. But this 1.9 trillion thing hasn't even hit yet. Now, there's other things that are impacting the economy, like oil going up. The situation in Texas did not help that situation. It is bigger than just the whole Texas situation. The oil situation has been going on for quite some time. In fact, the markets crashed. When it crashed, it was actually crashed because of oil. We actually got it in the books. It wasn't because of COVID. It was because of the situation with the oil. And that's why the markets crashed actually last year. And here we go again with this whole oil situation. We dropped the whole video on it, so make sure you go back and check that out. I'm not going to go through it now, but we got that whole oil situation again. And y'all know, I don't know if you listened to the CPAC situation they had today, the conservatives a forum thing. But Trump, he came out and he spoke. It was huge on Fox. I was looking at it on Fox. It was like almost 200,000 people on Fox watching that. So a lot of people paying attention. But Trump, as a former president, he got the inside scoop. And he's talking about all this stuff with the gas prices going up. He's saying it's going to keep going up even higher. The same thing I was trying to tell people, like, listen, you don't need to be a rocket scientist to understand supply and demand, right? Because I get in debates with people, and so I'm trying to monitor my debates. Y'all pray for me, okay? But so some people, they conflate arguments, okay? The situation is this: it's timing. You can't mix supply, demand, and timing. Okay. If one person argues that, there's no such thing as shortage, it's an abundance. Okay. Well, maybe there is an abundance of oil, right? I'm not opposed to that. I think there's plenty of oil under the dirt, right? But the demand for the oil at the time that the supply is available, that's what the hell we're talking about. if there is no supply to meet the demand, then you have a problem, okay? How do you get the supply? Well, that costs labor. That takes time, that takes investment dollars, that takes people, equipment to drill and get that stuff out. Then they have to store it, okay? And just like most commodities, they have expiration points and stuff like that, like corn, wheat. You just can't hold this stuff forever. It will expire and spoil. So timing is another thing that adds to this shortage thing. There is no economics without shortage. So just get that through your skull that everything, resources are limited, okay? They may not be like, they may be unlimited, but at the time that you need it, when people are wanting it, it's not available for, to meet the demand. So anyway, when you have all of this that's happening right now, we got the lockdowns, economy hasn't fully opened up, but the vaccine situations that's happening right now, they're banking the economy opening back up based off of people being vaccinated, which is still stupid to me because I was out this week, right? And it was just really freaking amazing to me how many people were just out. I mean, people are out now shopping like crazy. I hate going to the malls, went to the mall. It was just packed. It was just crazy. And I'm like, what happened to social distancing, right? I went to Dave and Buster's. Man, people are shoulder to shoulder there, and you can't even breathe. I can't even imagine wearing masks during the summertime. If I catch you at the beach with a mask on, you're liable to get smacked, okay? You can't even breathe. You're probably going to die, all right? So it's just stupid. It doesn't even make any sense, but we just let people, stay in their bubble. If it makes you feel good, then get your vaccines or whatever. But just say everybody gets vaccinated, the economy is going to open back up slowly for sure, right? The economy opens back up. You have people that's not even waiting for the economy to open up. On my timeline alone, a lot of my friends are not even in the country right now. Shit, Topaz, ain't you getting ready to go? Topaz, you always out the country, right? Somebody's always going somewhere, right? Everybody on my timeline right now is out of the country. They're not waiting for stuff to open up. People are tired of being locked down. And as this thing develops, we're starting to notice, this isn't a biblical plague here where, you look at somebody walking down the street and their skin just fall off their body. You just go and lock yourself up in the house. You're like, I don't want none of that, right? So people starting to, see it more and more. They're like, I'll take the risk. I get on the plane, go see my family, this, that, and the third, right? Because that's what's happening right now. Now, I don't see anything stopping that from continuing to be the case. Just like I said, I'm seeing kids out at, Whole Foods, okay? I shop at Whole Foods. All of these kids, I mean, this is some crazy stuff. I should record it so you guys can see if you don't believe me. They're having parking lot parties, okay? All my little rich, Caucasian neighbor kids, they're riding around with the top down, in the parking lot, just doing circles and hanging out. Like, it's like, tailgate parties. And I'm like, what in the hell is going on out here, right? Nobody's wearing masks. They're just hanging out and they're ready to go. The summertime get here, people are ready to go. When the feds and them put that money in there, my expectation is that people are going to spend it, okay? They're going to spend this money, and you got to understand, prices are going to continue to go. So we're seeing inflation pricing in right now, okay? And so if the feds, remember, all your interest rates are based off of this shit right here, B, okay? Off the Fed's rates. Actually, it depends, right? Most companies use the 10-year yield. They may use some other ones. Well, all of this stuff is based off of the yields, right? So your mortgage rate, your car loan rate, your credit card stuff, okay, all the debt you have, this what fits control. When they raise this rate, it's going to make the cost of borrowing money too expensive. It will crash the economy. The bubble will pop. And the feds are telling everybody that they're not going to do that. But the markets are saying, nigga, you lying, okay? Excuse me. You're lying, okay? That's what they're saying. You're lying, okay? That's what the bond market is saying. And they said, well, Powell lied to us before. When Trump was the president, he said that he was going to continue raising rates. But when the market spit up, he reversed mid-course. So the bond market is seeing this as, again, like, bruh, stop talking about stuff that you don't even quite understand, because once this thing starts to roll out, you're not going to be able to control it, because the only thing you can do to control it is to raise these interest rates up. And that will cause havoc, okay? All of your mortgage rates and all these other debt products that people have will be too expensive for them to afford. Remember, people got into their houses and all this stuff with these cheap interest rates, okay? What Trump was begging for, he got them right here at the end. But when this stuff rise, oh, defaults is going to be crazy. But there's the other things to talk about, and I'm not going to get into it. They're trying to, maneuver this whole situation because of COVID to try to reshape the economy. Talk about reimagining capitalism. Okay, talk about it in this book right here, the Great Reset by Santa Claus, I call him, but his name is Klaus Schwab. He's the head of the Economic Forum, the World Economic Forum. So the World Economic Forum, you got the United Nations, you got the World Health Organization. All these guys, they're all connected. Their agendas are all connected, basically. But every leader of the world meet with this guy, but he's telling you, they're not going to let a good pandemic go to waste. Okay, and they're trying to just change the entirety of society to be a connected world, always connected to the internet, right? Always connected so they can control it. Speaking of the internet, I've had 5G for almost 2 years now. I one of the first phones. I don't even have my phone on me, right? But 5G, I don't know if it's me or not. Y'all let me know. I just haven't seen the benefits. And I pay extra money to use 5G, but I don't see the benefits. Maybe it's me. Y'all let me know if your 5G experience has been everything you're hoping and expecting. I can't, discern the difference, to be honest. I'm fine with 4G. So when I'm on 4G and when I'm switching to 5G, I don't notice the difference. But anyway, the government and everybody is incentivizing this, and you still got the rollouts going for that. And infrastructure, those tower buildings, they're going to be, continue to, put those things up. But they're already talking about 6G. I mean, what's going on with the 5G situation, right? I don't know, but I'm actually disappointed. I feel like I've wasted 2 years of spending extra money for this technology, and I'm not seeing any real benefits. Maybe it's going to take some time. Y'all help me to understand that. But this is what had the market, messed up last week, was this interest, the bond yields here. So understand, when the yields go up, that means that people are selling the bonds. They're selling them. Prices are going down. So prices go down, bond yields go up. All right, that's how you read that. To learn more about that, we do have the Timing the Market course on the website. So you guys can check that out. When you actually get the master course, you get the Timing the Markets class free. All right, that webinar training was too good for me to actually get rid of that when we built the new website. All right. Also, with this whole situation, when you understand all of this, you'll see how all the pieces of the puzzle are coming together. And with this new administration controlling speech and all kind of crap, using big tech companies to act as arms of the government, we're on a one-way ticket to pure socialism. Right now, we have a mixed economy, but we're moving more and more towards socialism. And it's because they're messing up. And they want to keep on messing up. They don't want to fix it. They just want to see a way that we can manipulate this thing to kick the can down the road even further. Now, when they actually put this money in the market, who benefits? Stock market continues to go up higher and higher. That's why when I wrote that one article telling you to buy assets, asset buying is the key. Here we go. How to use asset ownership, right? This article here on the website as your savings account, okay? Because that's what you need to have. Poor people don't have assets, so the poor will always be poor until they get assets. It doesn't take rocket science to figure that out. The feds and them cannot solve for the inequality because their medicine is what causes this to further exacerbate, okay? The more they keep on printing money and stuff, it's going in the financial markets. People are not getting it, okay? And speaking of that, the CBO, here we go right here, the CBO, Congressional Budget Office, they dropped this report, economic analysis, about a $15 an hour minimum wage. I told you guys earlier about Dr. Walter Williams, okay? He talks a lot about the minimum wage and how it actually mostly impacts African-American people. It prices you out the market. So you have higher unemployment levels for African-Americans, but the government is asking, the planners to do this to fix it, but they just cause more problems. You don't understand how it works. But anyway, the CBO, this is not me saying it. This is the CBO saying it, okay? And they post this here. Now, Tim Scott at the hearing with Jay Powell, he pressed Powell about this analysis because the Democrats have been trying to pass this $15 an hour minimum wage through the stimulus package, which it didn't go through yet. But Bernie says he said he's going through the window. He said he couldn't get through the front door, the back door, but he's crawling through the window. That's what Bernie said to get this thing through. But anyway, Tim Scott asked Jay Powell, Fed Powell, about this. And Jay Powell said, I'm not going to answer your question. So he said he's not going to answer his question. And so Tim Scott laughed. He was like, you're right. That's a landmine to step on because politics, right? So he's like, if I were you, I wouldn't want to answer that question either. But he was like, I'm disappointed that you wouldn't want to speak about the economics when the Congressional Budget Office already gave their forecast if this $15 an hour thing goes through, right? They tell you right here. Employers would pass some of those increased costs on to consumers. Okay, the cost of your living is going up already right now because oil is going up, everything go up. Everything that you need, the goods and services, they have to be transported to you. That takes oil. Okay, whether it's by ship, whether it's by air, land, whatever. It's got to get to you. So when oil prices are increasing, companies are not absorbing that. Okay, they must pass the cost on to consumers. So that's why when I show you guys the economic stuff, all roads, I've been saying this before, the CNBC and all these people saying it, all roads lead to inflation, okay? But they're telling you right here, this is what will happen just from, this minimum wage thing, right? That cost is going to get passed on. So your price is going to go even higher, okay? It said it would lead consumers to purchase fewer goods and services, okay? So because if the prices are too expensive, then you're not going to spend as much. You spend more because things are cheap, right? Because we import a lot of these things. America don't even make many of the goods and services. We get it from China. Anyway, it also said that the employers will consequently produce fewer goods. People asking that have to produce goods. Then it said they would tend to reduce their employment of workers at all wage levels. So this is explanatory. What I tell you guys, you can be unemployed at $15 an hour. Okay. So if $15 an hour passed, there'd be a lot more people that would be unemployed. Small business people, people working at Taco Bell, KFC, Burger King, listen, they're not going to be paying these people $15 an hour. I mean, have you even got service from these places that you think that they would actually even get, $15 an hour? I don't know. Maybe it's just my experience. But when I go to Chick-fil-A, I see a complete difference in the quality and the service than when I go to Burger King. Okay. For some odd reason, every time I go to, Jack in the Box, all their employees be high. Okay. I don't know what kind of drugs they're high on, but they just be high and they always mess up your order. And then they be upset when they messed up your order and you go back to get them to correct it. Chick-fil-A, they mess up your order, they come and deliver it to your house with some extra gift cards. All right. So anyway, but anyhow, what employers do, all these things send signals to employers, and employers, they say, oh, well, if the regulators are going to do this, then we have to maneuver in a certain way to mitigate. So then they bring in machines. I just saw McDonald's with some kind of, change in their landscape with more machines or people can order through machines. Well, this is their way to try to get out of that, right? They're not going to absorb those costs. Anyway, shifting toward those substitutes and reducing their employment of low-wage workers. High-wage people, not impacted. Low-wage people will be cut, okay? That's just the way it's got to be. It's not good or evil. This is economic analysis. So put your economic hat on, okay? Be in your capitalist state of mind grind. All right. So they're just basically talking about that in here. Now, they said half of the 1.4 million people who would be jobless because of the bill would have dropped out of the labor force. So they tell you out here that 1.4 million jobs will be cut if they raise the minimum wage to $15 an hour. Now, do you want to be unemployed at $15 an hour, or if you're a low skilled person, would you take whatever's available, whether it's $10 an hour, $9 an hour, you're working, you got some kind of money that's better than not getting any kind of money. Now, some companies will, go up, and there's nothing wrong with, employers voluntarily raising their wages. Okay. There's nothing wrong with that. That's what the free markets, would do if that's what it calls for. The problem is government coercing companies to do so. That is actually the problem. So anyway, but it's just saying that half of 1.4 million people, look, they would have dropped out of the labor force. I mean, they are not going to even look for jobs. They're just going to give up. You don't need an economy where people are just giving up. Okay. And the stock market is hard, right? A lot of people sell, stock market is that and the third. Listen, everybody can't make it in the stock market, okay? It's not everybody's job to be trading in the stock market all day. Everybody can't be a day trader. Maybe you should swing trade. Maybe you should just do long-term portfolio. The thing I love about the market is that it's something for everybody. You got to get in where you fit in. All right. And I like to set the proper expectations so that when people come over here, that, if they leave, it's on your own. It's not like the other guys and their groups and the gurus who selling the Lambos and the chicks on yachts with bathing suits, because that's your expectation. And then when you start getting to the game and you don't get that, you just give up because you thought you were going to be smoking, Cuban cigars on boats, with Jay-Z, living a rap star life. And that's just not how it works. So just got to have real expectation on this. So here you go. This article, you guys can check this out. Bernie Sanders said how they're going to get away with this, get around this thing by penalizing corporations if you refuse to pay your employees $15 an hour. Now, that's not right. That's totally unconstitutional. But that's what they're looking to try to do, to force them to do so, which is, it's going to be catastrophic. All right. So check out this. Now, we had the meeting with, I'm going to you guys check out, SEC suspended trading and multiple issuers based on social media and trading activity. So the regulators are watching social media because now social media has the power to pump stocks. People are pumping stocks. They're pumping Bitcoin. Every time you turn around, I'm tired of seeing Bitcoin commercials, actually. They just pumping. Okay. So if you go in here, you can see the names. Actually, let me just click on to read more so you can actually see a couple of these names that were suspended. This was on Friday. All right. And you can see it's time stamped. This is straight from the SEC. All right. You can see the names that they got up in here. Right. BBDA, VLSP, EHOS, EBTI, AXCG, GYOG, HLXW, IPWG, MEDT, TTN, PTAH. So it's a bunch of names that they're not the popular names, but the regulators are watching it and they're suspending it. In this new environment, because of Robinhood and Reddit boys, doing what they did to the markets, listen, they're messing up the game for everybody. All right. They messed up the game for everybody because they could have got their money in 2 days. But no, they wanted to play politics and send a message. Now things get juicy. So now you're going to have more of this regulation type stuff. And I won't be surprised if they stop margin trading at all. I wouldn't be surprised. Whatever regulations the regulators feel to stop this. One of the big things they're talking about is taxing, your taxing our capital gains, right? We're all, traders. So you're trading, when you make money, make sure you put some money to the side to take care of your taxes. Well, they're going to I think this is what I think. They're going to penalize Wallstreet. Okay. They're going to penalize traders and investors because look at this, right? When you look at the stock market, right? The economy and the stock market are in two different lanes right now. You feel me? The economy, you have millions of people, hundreds of thousands of people are actually, 100,000 people are actually, let me sit here and get this cleared off. Got my squeezes popping off. Hundreds of thousands of people that's filing unemployment every week. All right. But the stock market does not reflect that. The stock market continues to rally higher and higher and higher. All these capital gains, I believe the regulators are going to actually increase those taxes to try to pay for some of the welfare spending that they're doing, because somebody got to pay, right? There's nothing free. There's no free lunch. Somebody has to pay. So just keep that in mind. I believe that's where we're going to be going at with that. Let me check out one last thing here. Check that out. Yep, we posted all of this in here. Give me 1 second. Crown Prince. Outages. Charlie Munger is what I'm trying to do here. I wasn't, he's one right hand, so you're pretty much looking at his brother, if you will. Charlie Munger, he had this big meeting. It's right here on the website. You guys can check it out on your own time. They asked us some really good questions. Charlie, his profile is in our Legends and Gurus group, so you can check that out there. And this articles and videos are under his profile, so you can actually check that out there. But they was asking him a lot of good questions. And basically he was just letting them know some good juicy information. In particular, he was talking about Bitcoin, right? He said Bitcoin remind me of the Oscar Wilde, what Oscar Wilde said about fox hunting. He said it was pursuit of the unidentified people. Like, oh, Chili got already. That sounds like a rap bar right there. Anyway, but I captured this right here. This is what he said also. He said, I don't think I know how the payment system will evolve. I do think that a properly run bank is a great contributor to civilization. So he's saying it's got to have some kind of social utility for civilization. It's got to benefit society in some kind of way. And the central banks of the world like controlling their own banking system and money supplies. He's not the only person that said this. I heard Jim Rogers say the same thing last year. Same exact words about central banks. They like to control their own money supply. Okay. So I do not think that Bitcoin will be the medium of exchange for the world. It is too volatile. Or we just saw the prices 18% in 1 week fall. Like that's just normal for Bitcoin. It is too volatile to serve as a medium of exchange, and it is really it's really kind of an artificial substitute for gold inside the body and buying Bitcoin. I don't recommend people right? So this guy, probably Warren Buffett, they do not buy gold. Also, although Warren, and Berkshire Hathaway picked up gold a couple of months back, but they normally don't buy gold. And the reason why they don't is because of the cost to store the gold. If they buy gold, they got to buy billions of dollars of gold. When you and I buy gold, we don't buy billions of dollars. We don't have billions of dollars buying gold. So there's no need for you to spend all this extra money and storage and stuff like they do, right? Like they will have to. And gold doesn't pay any interest, okay? It just appreciates. So that's the reason why they don't. And if you ever watch Warren Buffett's documentary, I think it was a documentary they have on him, but you'll learn like how this guy figured out what was Warren Buffett genius is that he figured out compound interest. Like this guy became obsessed with compound interest, and that's what he works. He works the interest. That's what he does with his portfolio. But anyway, I know I talked you guys heads off here, try to get us a nice, juicy little segment here. There's a lot of information, but I'll take, let's take a look at, 3 or 4 stocks for you guys, and then we'll bring the session to a close here. I'll do a guys, I've seen a couple of things in the chat. Let me apologize. But if you're on the website, if you have questions, you can actually hit me or instant messenger or direct messenger for those things that I missed, whatever it is they had to say. So should we buy the physical form of gold and silver or stocks that hold them? What about gold and silver mining companies? Chris? Yeah, so Chris, for me, you can do as you please. But for me, I have to have the physical gold and silver. There's no manipulation on that. We've been in gold and silver for quite some time. Supply and demand. It's just one of those things about supply and demand. If you guys have noticed in the markets this past few weeks, what's been going up? Commodities, things that have real value, real user usability. That's what people are talking about with Bitcoin. Like, it's nothing to do with Bitcoin, right? Corn, you can do something with that. Metal, copper. Copper has been going crazy up high. Steel, people are always going to need those things. Oil, right? I mean, you just can't go total green overnight. Though Biden and them, they want to do that, but it's just not feasible, right? But gold is that same thing. It's always going to be utility for it. And so fast that she buy them by the gram. Yeah, you can buy them by the grams, the ounces, the kilos. In the gold and silver group, we have links. I have links to the people that I buy from, the brokers that I buy from. If anybody else has any other links, put those links in the gold and silver group. Okay. OTC, Groupon, DNLI. Not trading this week until we see some more levels to play off. I usually get burned in these weekly consolidation candles. Hey, Dustin, that's a good observation that you're actually learning about yourself. From your own experience, because trading is a very personal journey. What works for you, what doesn't work for you, especially if you're using a trading journal, because the trading journal actually helps you to highlight those things and to see it. So once you're able to see what you're doing good at and what you're not doing good at, you can mitigate better, right? So that's what that's all about. Yeah. And basically, and what I want to look for this week is the floor. I'm looking for floors, stocks that's bottoming out. We last week we had lots of selling, and we had overselling. And look at stocks to be down out of that because of more hopes of the stimulus passing. And the faster they get through that, I believe the markets is waiting for that. Powell's already came in. He's already gave his concessions. What he's going to do for the markets. Well, he said he's going to do that, but the markets don't believe him. The bond market don't, and the stock market finally started to listen to the bond market. So that's why we got that sell off. But with stimulus passing, I think the markets will go up even higher once that actually passes. So I think that's what the hopes are on the stock market and the news, whatever they're feeding people in the news as far as more people being vaccinated, right? More people being vaccinated. It's more, if that's in the news, people are going to feel positive. I see people on my timeline saying, oh, I got vaccinated, and they're showing their little cards and stickers and stuff because they got vaccinated. It's like a badge of honor now. And they say they're doing good now. And I'm like, well, you were doing good before you were vaccinated. How do you even know the vaccine's working, right? And you show me somebody on their deathbed who's dying from COVID and they injected the vaccine in them and they come back to life, I believe you, okay? But there's no way for you to actually even know. They just put this stuff out. And in fact, they're talking about it now as far as the efficacy of it. We had Johnson & Johnson just came out with their vaccine, just got approval yesterday, Friday. So they just got approved for theirs. And so their stock looks like, it's topped off and it's falling. So, but they're talking about basically how often would you have to be vaccinated, right? I think people are signing up thinking that it's a once and done thing. It is not. For one, I'm going to tell you right now, it cannot eradicate COVID. It is an upper respiratory virus and it can't be eradicated. It's going to be seasonal. Keep back and forth. What does that mean for people taking vaccine? Or you don't forever be getting vaccinated. You get vaccine with Conco or anything else. No, you don't. So you go into a medicine cabinet, you go get what you got to do. You don't be flooding the hospital, all this other stuff. But that's what the media and the news and all that does. I've actually looked at the data. If anybody opposed what I'm saying, shoot that information to me. I got lots of data. I looked at it. I've run the charts myself. I'm telling you right now, the flu, we look at the influenza numbers, the common cold, all that stuff, that's all disappeared. And you look at the data, that stuff comes seasonal every time like clockwork. All of a sudden, it disappears. Come on, man. They manipulating stuff. Also, check out this book here, F.A. Hayek. If you don't have this, the audio book, I'm trying to remember if the audio book is actually good for you to listen to. The audio book is good too. I think you can listen to the audio book and be good on this. But this is Hayek, and the road to serfdom. Years ago, he's already written about what we're going through right now. So when I speak, on terms of economics, I'm speaking from my training, things I've learned. Mises, they call him Mises Christ. These guys, work together. Hayek basically trained under Mises. Hayek got the Nobel Prize. This is all Austrian economics, but these guys are against this guy. Okay. The principles are different. Capitalism, socialism, understand the difference, okay? So these are my recommendations. If you guys looking for something to study so you can understand the environment that we're going through, although the past is no indication of the future, we use the historical context to actually form our conclusions and to use that information to manage our risk. So that's what that is. Call me Doubting Thomas. Yes, I am Doubting Thomas. Silver's on a waiting list on most sites. Yes, silver, there, I'm telling you, there's a shortage in Europe. The supply demand, it can't fool the supply and demand in the real economy. People come out and need more real tangible goods, not no internet shit. You're going to need tangible goods. You're going to need that gold and silver for that, People are going to be coming out. The weather is beautiful. You notice the weather, right? I mean, it's like almost 80 degrees down here. Just last week, it was like 30 degrees. They need to stop manipulating the weather. Also, the weather I think it's going to be a great summer. People are coming out now. People coming out, they're feeling good. They want to start getting married and engaged. They're going to need rings. They're going to need jewelry. Okay. They're going to need to show it off. My son talking about buying a gold chain. I'm like, for what? But anyway, man, let me take a look at this Groupon situation right here. This is what Ron just pulled out. The Groupon situation, it's kind of looking like a cup and handle. As y'all know, Ron, he's the cup and handle king. He come through with them cup and handle plays like nothing. So what we're seeing here, just looking at the 100 moving average, as you can see right here, major support. Like this go up to 200 right here. The floor is right here at the bottom. So that floor already established. Prices rise. We got higher highs, okay, and we got higher lows. So I'm bullish on it. Just keep in mind of the you're at resistance right now, but that resistance looks like this stock will be able to overcome that resistance, and then you have basically a $60 target. Just use the whole number. All right, and CRSP. Oh, DNLI. Let me get that first. Denali Therapeutics. Oh, yeah. As you guys know, I hate those therapeutic stocks, but I like this setup right here, though, Terry. Yeah, see, I like setups when you just look at it, like you already see it. You feel me? So when you look at this, you can see prices changed all the way down to the 100 moving average support. This is your support zone right here. That's your floor. We can see the trend is bouncing up, momentum shifting up, and if we just from this high swing down to this low swing, we can get some Fibonacci targets on here. Considering if price breaks above the 50 moving average that's coming right here to break above, then you will want to aim your targets at the around the $80 target right here at the 618. Depending on what kind of options you're playing the options, you should be able to get in and out of here at this target zone. Okay. Now this could go all the way up here if it's real strong, but you know, that'll take more time. Okay. For a shorter time, you should be able to get in and set your targets to get out right there. Therapeutic stocks, biotech stocks, I hate them. They're not my cup of tea. So you got to know what works for you, but that's what the charts look like. CRSP. Yeah, this is another therapeutic stock and it's falling. It's definitely oversold. But I mean, this is really bad here. Looking at this here, it needs solid support. It's breached through the 100 moving average. It's continuing to trade lower. So I'll set my targets around to the 200 on this, although it is oversold. But I'll look for somewhere down here. Let me actually just see on some Fibonacci levels here. All right. So we're looking at the bearish case. We'll take from that swing there. So right here, yeah. So we're right in this range right here at the floor, and it's close enough by the time. So it's gonna take a couple of days, but this 200 will probably meet right up around here. So you see prices. If prices come right here, if you're looking to play this to the long side, then I'll go. Wait for the floor to catch. Okay. Who else? Oh, United Healthcare. Yeah, United Healthcare is looking actually pretty good. Yeah, these are the type of stuff that you want to be looking for. You know, those dips, those floors. Okay, with all that selling that we had last week, when you see it bounce off that floor, okay, and price comes up. Once price crosses above your fast moving average, right, then you start to look for a bounce play. Okay, so you start to play that like that. All right. And I'll just swing from here to here so we can get some new levels. These levels are from the previous time, but this is still valid right here around 340. But you want to see if price, carries up above all this resistance, the 50 moving average, the 100 moving average. It has a squeeze. So because it has a squeeze, that should give us enough juice to be able to, clear these zones. So once we get here, I'll look for it's healthcare except for being to reach the weekly level. Okay, so Dustin said, yeah. So if the overall theme, the sector itself, let's take a look. Yeah. So the sector itself did the price is still under the fast moving average, which is the 8 moving average, but it's hit the floor, right? The floor is the 100 moving average. Don't have a reversal yet, okay? But it's at this zone, so it wouldn't amaze me if this thing starts to reverse, okay? But if it breaches, then just cancel the play. If it breaches, cancel the play. That's your next zone down here. But if it solidifies, starts to chop up right here, you want to get the best picks that's in that sector for a rally up higher. And DM. All right, same thing here. Oh, this is okay. So same thing here. You want to catch the floors here. Your floor is right here. You can see that time. Yeah, that's a clear situation. We got the sell offs at that oversold conditions. Once they get too much selling, okay, then you normally start to get some kind of choppiness or reversal at the bottom. Normally we'll chop around here, start to form a floor. Okay, then once it forms the floor, you'll start to see it leap up off the floor some. Then you set your targets to get in on it. So depending on what you're gonna do with it. If you're day trading it, then you probably get some good, nice move. You're swinging it, it's not good right now. Gotta buy in it. Okay. All right. So $3. Okay. Yeah. Just know your targets. Just know your targets. You got in at $3. You want to make sure you realize some profits. You should have been selling out up here at the top, to be honest. But it's up to you. You're still positive. But make sure you realize some of your profits. Take profits often. And Topeezy got a play for y'all for PSEC. All right. Into those, make sure you yeah. Definitely prices now to the moving average, so it'll come down. Like it's trying to take a breather here. Come back down to like the 20. See it come down to like the 20 moving average right here. It's a little extended and it's coming down, but I'll probably expect to see a floor right here. See how it behaves at this zone. Okay. It's a dividends play. Like she said, they got dividends coming out. Oh, they already just paid dividends. Okay. So boom, they're paying a little bit of dividends. So that could be for your portfolio if you getting those dividends monthly on the 25th. They pay dividends. Okay, yeah. So you can get some money right there. That's what Topaz putting y'all on. Yep. She said, wait for it to dip. Great session. Time for some grub. That's right. That's right. It's been good, you guys. I know I've kept you longer than I normally would. So let's go ahead and bring this to a close. Make sure y'all check us out at Wallstreet.Jackboyz.com. Tell a friend to tell a friend that this is where we get it in. Right here on the website, Wallstreet.Jackboyz.com. And make sure to invite someone. You could do it straight from your profile page, from the email invites. We keep track of anyone that you invite to the website. And if they were to sign up, it'll be your record. So it's a much better and efficient way for me to track those things. A lot of reward system, those things that it is already in the cycle. Okay, you just put their email, boom, and if they're serious, then they're on. Okay, and you guys see March 2017. So this is the month, the week of March. So again, we're up on our 4-year anniversary. Got the OG status badge popping off right now. So I want to thank you guys for hanging in there with us, and we're still growing. Lots that we're learning here about the marketplace and marketing and stuff like that with different social media and stuff like that. But we'll get there. But we want all strength, no weaknesses. So anyway, you guys have a great week in the markets. We'll catch up in the chat this week. Peace.